Pros and cons of micro-investment apps versus traditional brokerages. Micro-investment platforms like Stash, Acorns, and Robinhood have stormed onto the scene, offering a more approachable entry point for those new to the investment game. Let's break down the good and the bad when compared to the industry Goliaths, Fidelity and Vanguard. Pros of Stash, Acorns, Robinhood. Accessibility. These apps are the proverbial welcome mat to investing. They've removed the air of exclusivity that traditional investing once had. In Portland, Oregon, where I'm from, there's a strong culture of DIY, and many first-time investors appreciate that these platforms demystify the stock market. Low initial investment. Got a spare $5? That's all you need to start. You can literally invest your pocket change with Acorns Roundups feature. It lowers the barrier to entry, which is crucial for getting more people invested, literally and figuratively, in their financial futures. User experience. If there's one thing these apps excel at, it's design. The interfaces are slick, intuitive, and they make the traditional platforms look like relics. As someone who appreciates good design and UX, this is a huge plus. Innovative features. Features like automated investing with Acorns or Robinhood's commission-free trading model have revolutionized small-scale investing and forced the old guard to adapt or adopt similar features. Cons of Stash, Acorns, Robinhood. Oversimplification. While simplicity is inviting, it can also be a double-edged sword. The nuances of investing can be lost, leading to uninformed decisions. It's kind of like learning to cook using a microwave. Convenient, but with limitations. Potential for overtrading. The ease of trading can encourage users to buy and sell more frequently, which isn't always a sound long-term strategy. It's the investing equivalent of constantly refreshing your social media feeds. Limited investment options. While traditional brokerages offer a smorgasbord of investment options, these newer platforms often have a more limited menu. Think of it like going to your favorite food cart in Portland. Great for what it does, but it's not the same as a full-scale restaurant. Customer service. The traditional heavyweights usually have more robust customer service offerings. While you might not get on a first-name basis with someone at Fidelity, you'll at least know there's a solid infrastructure in place to handle your queries. Pros of traditional brokerages like Fidelity and Vanguard. Range of services and options. They've got the full suite of investment offerings, mutual funds, ETFs, retirement accounts, and more. Similar to the extensive craft beer selections we have here in Portland, there's something for every taste. Reputation and security. Longevity breeds trust. It's hard to overstate the peace of mind that comes from investing with companies that have stood firm through many a market storm. Educational resources. These old-school brokerages usually offer extensive learning tools and financial advice. It's like having an experienced mentor guide you through the often cloudy financial forest. Cons of traditional brokerages like Fidelity and Vanguard. Higher fees. Historically, traditional brokerages have charged higher fees for trades and account management, though this is changing under pressure from the new players. Just as Portland's foodie culture demands fair prices for quality eats, investors now expect fair fees for services. Perceived complexity. They can be intimidating for newcomers. With more complex interfaces and a plethora of options, they can feel like walking into a massive library without knowing where to start. Minimum balances. Traditional brokerages may require minimum investments that can be a barrier for many. Not everyone has the savings to meet these thresholds, especially just out of the gate. Remember, there's no one-size-fits-all answer. The best platform for you might be a mix of both worlds. Perhaps starting with an app to wet your feet, and then, as your portfolio grows, transitioning to a traditional brokerage for more comprehensive service. In either case, it's all about growing your money tree from a sapling to a towering Douglas fir. Each type of platform has its role in the financial ecosystem. Choose wisely, invest regularly, and diversify. Your future self will thank you.